I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is a Friday for the weekly wrap-up. We also had crop production and the WASDE supply and demand report out today. We'll go over the results and how the trade reacted. But before we get into that, let's turn over to the Grain Hedge trading platform and see where we closed off the day. Corn trading up 12 3/4 cents, soybeans up 1/4 penny, and wheat in Chicago here trading up 6 1/2 cents. Keep in mind that this morning we did have a nice reportable sale here for soybeans for 180,000 metric tons sold to unknown destinations. So that was just an additional piece of positive news here to help soybeans. But going into this report, soybeans was not looking so good. It was actually in the negative. And following the report, we also saw negative trade action, but we were able to come back. Let's take a look at these daily charts. This is the November soybean chart on the left. This is the December corn chart on the right. You'll notice this is a daily chart. Each one of these bars represents 1 day worth of price activity. And what you'll notice is that today for soybeans, we actually traded down to that August 24th low of 855. We actually printed an 853 1/4 near the lower end of the Bollinger Bands, but we're able to start rallying back here from those lows. Seemed as though that was relatively strong support down there. That low back in August 24th, that was really, if you remember, when the global markets were all selling off, when oil was trading sharply down, the Dow was trading sharply down. So we went down, we retouched on those lows, but we were able to come back and for the most part finish mostly unchanged on the day. But I would expect in the weeks to come, it's likely that we'll see a little more selling pressure here from soybeans. There's a good chance, I would think, that we'd go down and retest those lows that we only spent so briefly at here today. When you look at the December corn chart, you'll notice that we did rally today. We'll talk a little bit about why we rallied, but one thing to keep in mind and a warning going forward into next week is that we're right near that 100-day moving average. That 100-day moving average is at 388, so just be cautious up here around these price levels. We closed today at 387, so we're really only a penny away from that 100-day moving average. I would suspect that it will offer up some resistance, so just be cautious here in the overnight session on Sunday as we move into the Monday trade session. Now this morning we also had export sales out this morning for corn and soybeans. It was very positive. Wheat was within analyst expectations. Corn, we saw 411,000 metric tons sold. Soybeans, 1.79 million metric tons sold. That was above analyst expectations, so very positive there. And wheat, 290,000 metric tons, up 5% from last week's export sales. So relatively positive export sales out this morning, and then you couple that with that nice reportable sale, and it was just a good day there for exports. Now let's talk a little bit about the supply and demand report. Take a look at the yield estimates here. In August, the USDA announced that corn yield was 168.8. That was their forecast. On average, going into today's trade session, analysts were expecting the USDA to revise their forecast down to 167.6. What we saw was the USDA come in right at 167.5. So for the most part, right on analyst expectations here. There was no big surprise, but that revision right there, I think, caused a little bit of short covering, helped people get a little bit more bullish here, corn, especially after having been beaten down for quite a while. And so that was a relatively positive piece of news. We'll talk more about ending stocks and how that may have contributed to some of the buying pressure here today. When you look at soybeans, yield in August was 46.9 bushels per acre. Analysts were expecting 46.0 0.4 bushels per acre coming into the session, and what we got was a 47.1 bushel per acre. So analysts were expecting a revision lower. We didn't get that. We got a revision higher by 0.2 bushels per acre. In general, though, we still did see ending stocks get revised lower, an increase in crush and a decrease in beginning stocks from a smaller old crop carryout there helped keep ending stocks right at 450 million bushels here for this new crop. When you look at soy, that was higher than analysts were expecting. Analysts were expecting to see a yield revision lower and ending stock somewhere right around 415. We got our yield revision higher, but we did get a slight cut in ending stocks, which was kind of a double-edged sword there, kind of canceling each other out. Ending stocks for corn were 1.713 billion bushels there in August. Average analyst guess coming into today was 1.643, and what we ended up with was 1.592. It was, for the most part, in line with analyst expectations. Not a huge surprise, but again, smaller ending stocks helping to lift the price of corn here, causing some people to cover their shorts in today's trade session. When you do look at global ending stocks, corn global ending stocks declined from 195 million metric tons there in August down to 189.69 million metric tons this month. We also saw soybeans decline their ending stocks on a global level from 86.88 million metric tons to 84.9 million metric tons. We increased their overall global ending stocks up to 226.56 million metric tons. This is a Friday. We do talk about basis, about the cash markets, and here's some of the trends that started developing here this week and actually continued developing here this week, particularly for soybeans. Take a look at the chart here. The chart on the left is the soybean basis changes average across the U.S. And what you'll see is the green is basis that was that declined 2 cents or was better than that. You'll notice on average soybeans declined 7 cents across the U.S. And the red areas there were 12-cent declines or better. So very weak basis here, but what we're seeing is kind of that convergence of the old crop and the new crop price here, and that was what contributed to that 7-cent decline. Crush plants did decline the most here, down 10 cents on average across the U.S. The river market was able to hang in there, only declining or actually increasing a penny here because of the Gulf, which actually increased 6 cents this week. So that was good to see. The Gulf showing some strength, river terminals showing a little bit of strength, despite the fact the rest of the basis market, rest of the cash market, was weakening and softening throughout the rest of the country. For corn market, what we did see was mostly unchanged across the U.S. River markets did increase a cent. The Gulf was up 2 cents on average, and ethanol here declined a penny. But there were some plants in the western part of the grain belt that did advance as much as 5 cents. So corn not nearly as dramatic of a week as soybeans, but still we did see some changes with the river showing gains and the Gulf also showing gains. Guys, that wraps up today's show. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. And remember, if you have any questions about the trading platform, if you've taken a demo already and you're seeing what it's like to have live quotes in the palm of your hand, you're seeing what it's like to view live quotes and be able to place trades on your desktop computer without having to phone in to a full-service broker, and you need help, and you have questions that aren't answered, please give the office a call. We'll give you that one-on-one walkthrough, that personalized walkthrough to make sure you get the most out of that 14-day free trial. Thanks a lot for tuning in. We'll see you here early next week.